Welcome to Profile Traders. This is Reza and you're listening to my market analysis for Friday the 20th. So for several sessions we went absolutely sideways, doing very much so nothing, and then finally we decided in a very late afternoon Friday that market was gonna break above the breakup level which I gave you at 2100 and pushed very healthily and very positively with a close towards the very high of the session. Now there are some reservations here as far as the validity of this move, considering the fact that it happened during an option expiration, which could very well be part of manipulation going on due to option expiration, and also the fact that it happened on a late Friday. The move cannot be trusted entirely, but the fact that we pushed 18 points above 2100 and closed at the very high of the day, that without any doubt is extremely bullish. And if it wasn't a Friday and if it wasn't a option expiration day, I would absolutely label this as an extremely successful break above 2100. So now the next level should be the touch of our trend line up there, anywhere between 2145 to 2150-ish. Now let's not forget that there is still a possibility that this market will do exactly what it did here and will do something that is extremely common to happen prior to extreme severe market reversals, which is you come and you break the previous levels high, like in here, you bring in enough buyers on the break up, then you lock them in, and then you reverse the market aggressively to the downside. Basically you make a new high with no follow through and a failure and a bull trap in place. Therefore now at no cost we should come and close below 2100. Any close below 2100 will make this Friday break a bull trap, and an extreme severe reversal could then come through once we close back below 2100. If we continue to remain above 2100, then you have my upside projection. Nobody knows exactly because we are at record highs here, but the only place that I can see price encountering resistance is based on the projected resistance line up there, and that's all I have to work with. So be very cautious and very careful that a return back into 2100 may create an avalanche of selling and a very nasty severe reversal. As far as being able to tell if this is real or not, we cannot yet. We have to watch the action Saturday, Sunday night and Monday to pretty much assess if this was just a late afternoon business of an option expiration day or if it was for real. As for oil, I had a sell zone of 52.5, 52.75. It pretty much locked it in terms of resistance, and now we are back again. So unfortunately all that we did is to widen up our trading range, which goes from 49.30 to 49.50 on the downside, 52.5 to 52.75 to the upside. So when you have a trading range like that, you buy as close as possible to the 49.50 area and you sell as close as possible to the 52.75 areas. Oil, I do not believe has much more of a downside left in it. Therefore, anytime that it will approach the 50 levels, I believe it's a great buy. With the cold, with the situation in the Middle East, with everything else that I listed the last time, I do not believe that there is much of a meat left into shorting crude at around the 50 areas. And on the upside as well, it is going to encounter significant resistance every time there is a significant rally taking place, because it's still under pressure overall. Therefore, the moves are back and forth, fast and furious, and you cannot hang on to any side for long before seeing a complete total reversal of the move against you. So be fast, be quick. If you get paid fast, take the money. Don't be too greedy by being stubborn in one side or one direction, because you're not going to get it. So it's going to be this fast back and forth, and that's all we will get from crude. As of right now, with the close at the very bottom of the day, 51.40, 51.50 is now resistance. If we remain below that, then we should probably come and retest this low, in which case I am absolutely very interested on the buy side around 49.30 to 49.50 if we can have an opportunity to grab it over there. And if we are about to break above 51.42 to go towards 52.5, I will have to evaluate the situation upon an attempt to break above 51.42. So very two-sided, very confused market, and for good reason. When you crash from $114 to $43, $42 in a matter of 2 months, you pretty much dislocate entirely that market. And that's what we are seeing in crude, a lot of confusion going on. As for gold, I also gave you a level of support from many days ago, 1197 to 1200. Once it got into my zone, it ran to 1214. Another time on Friday, it came to my zone, it bounced again, closed at 1203. So the condition, it remains the same. This is an extraordinary important support zone. It is a combination of a touch of a major uptrend line and also this downtrend line projected to the right has a cross between the downtrend line and this line right around this area. That's why this area is so strong. And also you have an extraordinary bullish volume divergence where the volume keeps on making new low, meaning there is a lot of sellers, a lot of manipulators trying to bring price down by selling the paper, but they are not able any longer to put much of a dent in price. Therefore, as soon as there will be a little bit of a buying coming into gold, we should see an explosion to the upside. I am the absolutely utmost bullish with gold. Mr. Draghi and Madam Chairman, they can both kiss you know what with their lies and their deception and their inaccurate statements about the fact that we are in a deflation. I don't know about them, but me, I cannot list you one item that I go buy next week that is cheaper than this week. Everything goes up and up and up, despite the fact that the price of crude has crashed from $114 to $42, $43. It did not put a single dent in the price of other products that should have come down. So deflation, get the hell out of here. Federal Reserve liars. There is no deflation. There is deflation in very, very specific areas, which is the poor consumer's ability to earn money. Yes, Madam Chairman, there is deflation there. There is deflation on the household income that has been deteriorating and going down the tube for the last 7 years. Yes, there is a deflation there. But other than that, there is no deflation. And this whole theory that we should punish gold because Madam Chairman and that idiot Draghi from Europe are talking about deflation is complete nonsense. So I believe there is nothing wrong with gold. Extraction cost of gold is $12.50. We are $50 below it. There is aggressive accumulation of the physical by China, other nations, India, etc., etc. And this manipulation, this silly ups and downs in the paper doesn't mean anything. So I believe this selling that comes in, it's pure 1000% Federal Reserve or somebody else that want to make people believe that there is no fear of inflation, despite all the QE nonsense that is coming out of every single central bank. And as it is cheap right now, I can assure you that every ounce that floats out there, the Chinese are accumulating it and putting it into their central bank safes, so that in 4 years, 5 days, they're going to come and say, you know what, dollar, your toilet paper that you have printed and it's backed by hot air and backed by nothing. Look at our currency. We're going to offer an alternative to the dollar, the won or yuan or whatever it is. And this is that much ton of gold we have in our safes to back our currencies. Which currency do you think will have more value? A currency backed by hot air or a currency backed by gold? So don't get fooled, don't get duped. There is a lot of strategic reasons and purpose why they brought gold down here on paper, but I believe at 1200 it's a hell of a buy. I may be completely wrong, just sharing an opinion with you. With that said, have a wonderful evening. If you decide to join us, check www.profiletraders.com. You can get all my 5 courses and 1 year membership to my live trading room for $550. A deal that I can challenge anyone to beat. Have a wonderful evening or a weekend. Talk to you Monday.